not a significant announcement from the Bank of England. There was no change to the interest rates, and so you would expect that to not have a big impact. What's really happened, what's really shook things up today from the Bank of England is here for cable. Cable's moved over 120 pips here. We're currently trading at 136.75 from a low of where we were 135.65. So over 100 pip move, big number move for cable. All to do with the Bank of England rejecting the likelihood of negative interest rates anytime soon, basically certainly within the next 6 months. So that's given sterling a big lift, a big move here against. This is the 15-minute chart, so it obviously looks a bit exaggerated, but this is the hour chart as well. And a big old move there for cable. Now then, is anybody here? I'm sure. Update all. I'm not sure that I'm connected here. I think I am. Anyway, usual setup as we go live here. Really, Bank of England, big news, and we've just had the weekly claims out of the United States as well for this week. And that's come in at better than expected. Well, a little bit better than expected. 30,000 better than expected. It was expected around 830,000. It's coming at 779,000. Last week's been downgraded as well to 812,000 from 847,000. That's better news. So it's still a huge number though, around 800,000, 879,000. The continuing claims is down to 4.59 million from 4.7 million last time, or from expectations, I should say. Unfortunately, the continuing claims have actually gone up to 4.785 million from 4.77, so that's a deterioration in the previous number. The weekly average is 450,000 or 448,000. Labour costs have leapt up as well. Actually, no, yes, they're better than expected. 6.8% unit labour costs for fourth quarter as well, and non-farm productivity has slipped a tad. So factory orders yet to come out of the United States. So relatively better news than expected for the weekly claim. So it's coming at 779,000 compared to 830,000. So that's a 50,000 better off. So that's a relatively good number. And any news on euro, says Mohammed? Well, Mohammed, euro's been testing this key 120. This is the 1 hour chart for the euro, Mohammed. You can see 120 here, been testing that. Let's zoom this up a bit. See how the lows are getting lower, the highs are getting lower. So we're trending lower. This is the 1 hour chart all week. We've been moving lower, and we've been testing 120 yesterday. We bounced off it. We rallied to 120.13, which became today's pivot point, capped by the pink line here, which is the 50-hour moving average, just above the 20 moving average. Then we moved lower here. So this crossing EMA strategy that we talk about, or we teach here this morning, went short here at 6 o'clock this morning, server time, and you're still short. We've ran down here through having rejected the pivot point through S1 into S2, and we bounced off S2, interestingly. So for 1, 2, 3, 4, 5 hours there, we stayed above S2, which sits at 119.85. But the key point is what I was trying to make is we've broken under 120. So 120's broken today, and we continue to move down. If you look at the 4 hour chart, that would have triggered lower much earlier. The 4 hour chart here went short here at the beginning of the month. So that you've been short here all of February as we went under 121. So a big 100 and odd pip move for 4 hour traders. And the daily chart here actually went short under the 20-day moving average here in the middle, the beginning of January. Here, this big sell-off, that big line there. Sorry, I've got too many lines on here. This is the daily chart, but that was the 11th of January. So end-of-day traders have been under the 20-day moving average, and it started to peel away as we ran into the end of January and into February, which accelerated lower. So we've gone from what was the trigger here as we broke under 122 on the end of day trade. So that's nearly 200 pips there on that end of day euro short position. So is the same. Who's this? Emmanuel. Hello. Good afternoon. Any on the Dogecoin, Emmanuel? No, I don't track it. It's obviously got very excited last week when obviously Elon Musk got involved in it. It's not something I follow, to be honest, but I know there's lots of been a big ramp up in it. I do know that Ethereum, for instance, has hit a new all-time high. As far as the major crypto is concerned, Bitcoin here, we've had 1, 2, 3, 4, 5 into our 6-day higher. We've broken this little, what was a little downtrend here from the high at 42,000 up here. So we broke through that yesterday. Sorry, not yesterday, or on Tuesday. Higher again yesterday, and we're currently trading at 37,350, basically. So Bitcoin's up on the intraday, on the daily chart, and possibly looking for, to test this next, obviously 40,000 and above, possibly. So strong 6 sessions you can see there for Bitcoin. Nasdaq, Randall, really, the equity markets look pretty strong. The thing that I haven't got it here on this particular setup, this is an MT4 platform, but if you look at your VIX chart, VIX.F on your MT5 platform, you can see we've had a big shakeout, a big bounce down, or a big move down, big spike down in the VIX chart. Actually, let me see if I can find it for you. I'm saying I haven't got it. I've got it. Obviously got it here. I just want to. I won't share it, will it? No. Okay. So, yeah, the VIX has collapsed quite significantly. So that suggests that perhaps we've got some more strength in the equity markets. This is the Nasdaq here, having spiked last week in all the volatility of the fund, the worry about the fund managers, the Reddit news. Excuse me. We bounced back up through the 20-day moving average, and that triggered long again here on the 1st of February, and then we've gone long again. So that closed out that long position here, the big shakeout last week. Looked like it was going to go short, turned around immediately with this engulfing candle on the 1st of February this week, and the third, we were down yesterday, but we're still holding up. So I would, you could expect we're very close to all-time highs. That could be then tested again. It could be a final. The other thing, it could be a final flurry of all the buyers, and we're running out of steam. But at the moment, it seems relatively well bid. Interestingly, the MACD has flattened out completely. So the MACD here, can you see that? Hopefully, you can just build that up. Let me make that up. Let me just move that stocks out of the way. So the MACD has flattened here. The signal line is flat. Hopefully, you can see that just above the picture where my head is. So the flat MACD has flattened out, but it's sort of edging up as this continues to rise. So it's not a divergence as such. We did move down here as we went down, and then hopefully again you see that just above my head, and it's continued. It started to spike back up again. So it's cooled, but it's because the momentum may be running out of steam, but we're still holding up. So there's no big sign of a major sell-off. We did shake out quite significantly here last week, but that was triggered by the, obviously needs a trigger, needs a catalyst. That was triggered by the hoo-ha around the Reddit situation and all those fund managers getting short, this big short squeeze, and lots of cash being made by lots of people. Just on that, I was reading this morning, a big, well, not a big fund, but a small fund manager made a significant gain on GameStop. They'd been long GameStop from around $10 from last September, so they'd cashed out around that 400 level. So they made 700 million apparently on that one. A fund manager based, I think, was in North Carolina. But anyway, so yeah, Nasdaq remains relatively well bid. Randall is the short answer to your question on that one. And same with who was asking about the Nasdaq. Gomalkello, yes, same with it. It's trending up. You could expect that 13,600 level to be struck. Was the daily time frame 4 hour. That was a shakeout last week, but obviously much more exaggerated here on the 4 hour time frame. So ran into that 200 period moving average on the 4 hour. Then it's bounced off it quite significantly. You could argue a bit of a double top, but the distance, the time between it is rather short. So a bit of a move down today. The 50 period moving average there is at 13,315 for the 4 hour traders. And the 1 hour trade, again, moving along. The first, the second, the third rolled over a bit yesterday. Looked to move down, and we've ran under the 20-hour moving average. Moved down, and then we're attempting to move back up it now. So that's moved. That was a short position here. If you're trading this on the 1 hour time frame yesterday, that tracked lower. Would have got to whatever your ATR is on there. Can't see the ATR. ATR would have taken you about 40 points. So 13,429. You got your 40 points at least on that. And then that's closed out here this morning as it's turned above the 9-period EMA. And then that's looking to try and go long. I'd like to see it break the 50-hour moving average and the pivot point for this to show some sort of momentum up. I mean, technically, it has broken the 5 and the 9 crossed here, and technically it did break over the 20 period there, but it was a very minor break, perhaps a stronger break in the last hour. So that would have a safer entry there. But the previous hour we'd moved back down again, but looks fairly comfortable not comfortable, but that would be a stronger entry here in that last hour. Obviously we've got 15 minutes of this current hour and we're still capped by the 50 period, so tracking up possibly a nice break of the 50 hour, and the pivot point would show a bit more momentum to the upside. But the Bollinger Bands have squeezed out, they've flattened out here. You can see sideways support down here at the bottom of S1 at 13,354. Pivot point 13,475, and then the R1 level there above the top of the Bollinger Band. But too much perhaps to ask today. But yesterday's high it was just shy of this all-time high, 13,600 on the Nasdaq. That was Randall. We talked about that. Who's next? Mohammed. Stop spamming me, my friend. I'm very well, thank you. MHB, how are you? Please, how do we that are beginner in trading benefit from hot forex? My friend Emmanuel, follow us here on these live Facebook posts and these live YouTube broadcasts. But go to our website, go to the education page, and get started with the education page. Read the ebook. Download the webinars, watch the webinars, and what more importantly, start with the videos. They're easier to understand, easier to get started with. And Emmanuel, contact me here. Basically, contact me on Facebook. Contact me. You can email me if you want a long, slower chat. Webinars at hotforex.com, and that goes for anybody. So there you go. I love questions like this, Amigola. Is this broker legit? We certainly are legit, my friend. We've been in business for over 10 years. We're regulated in many, many jurisdictions around the world. Check out our page, hotforex.com. If you've got any questions, please ask us. As I say, lots of partnership deals around the world with you, going to business with us. But yes, we certainly are legit. But it's a fair question. You've got to ask yourself, what, and with any broker, and this goes for anybody, it's the whole package, the support, how quick the withdrawals are, what's their brokerage like, what's their, the speed of fulfilling of your orders and all that sort of thing. How quickly can you get your money back when you withdraw it? All that sort of stuff. Tight spreads, all that sort of good stuff. Lots of brokers say a lot of the same thing, but check us out. We wouldn't have been in business for 10 years. Amigo, if we weren't legit, my friend. So anyway, all the best. Dow Jones a bit. Dow's similar to the other equity markets. Gomalenko. Have I got the Dow here? Here we are. No, that's the DAX. Here we are. USA 30. Similar, as you can see, to the other equity markets. New all-time highs here for the Dow earlier in the week. Zoom this up. Yeah, so here we are, 31,260 earlier. What's the weekly chart? I thought that looked a bit strange. Sorry, it's a weekly chart. Just anyway, you can see the weekly chart still relatively well bid. We were all-time highs here at the end of January. Now we sold off a bit into this first week of February, and we're bouncing at this 30,000. But let's just drill into the day time frame. So you can still see Relatively well bid. It did break under the 20 period. It's weaker. It'd been weaker than the Nasdaq because it went under the 50 period move. Now we also touched the bottom of our Bollinger Band now, but we also went into this psychological 30,000. So that's the big line in the sand for all you Dow traders. The USA 30 big line in the sand is that 30,000 low that we got last week. And then again, just like the other equity market, you can see Monday, Tuesday, Wednesday, big recovery. Thursday so far, futures at 30,775. Again, today we're capped at that the 20 a day moving average. So we're still under the 20-day moving average, but we moved down really quickly and we've bounced back quite quickly. Not a great movement, but it's still showing some strength. So watch that as we go forward. So yeah, 30. That's that key level there. That 20-day 30,800 sort of level on the Dow. Gomelenko, but certainly intraday. Let's go down to 4 hour. This is that big move down for the beginning of February into that 30,000, and again 30,000. 4 hour traders with this crossing EMA strategy would have been long here. Early hours of the 2nd of February earlier this week, over the 200 period, over the 50 period moving average, and sort of topping out here this 30,775. See the resistance there. So the daily R1 sits there at 30,900 for the for the R1 level. MHB, there we go, my friend. Who's asking if we're a legitimate broker? There we go. MHB says we're a good broker. So there we go. Thank you very much for that, my friend. Dr. Sand, hello, sir. How are you? You never did get your book, did you? No. Dr. Sand was in one of our webinars, guys and girls, and a webinar. We've given a book away, a new book by Jack Schwager. I can't recommend it too highly. Great book. His latest Market Wizards book. He's wrote about 6 or 7 in this series now. Jack Schwager. Any of the Market Wizards books. The first ones were written in the late 80s. So, and we gave away his latest book, which he wrote, which was published just in November. And Dr. Sand won it, but he couldn't get it to where he is. I think it's wherever he is in the world. But anyway, I think you got a cash alternative. I think Dr. Sand didn't you in the end? I can't remember. We've done the Dow. Emmanuel says that's not a problem. Emmanuel, that's what we're here for. He's going to email me. Very good. Remember, it's webinars@hotforex.com. There we go. Just reiterate. I'm a client with here has never changed since I joined the crew. Randall, thank you very much. Sounds like I've got a fan club in here today. So there you go, guys. You're not plants or anything, but nice comments. Thank you very much. Hi, I'm Sarfaraz. Hello, Sarfaraz. Hello, my friend. Hope you're well. Anything you want to have a look at? Good luck to you as well, Sarfaraz. Error. What's this? Error 500 persists. I don't know what you mean. Sorry, 10%. I don't know what that is. Oil. Error 500. Is that an internet connection, or you're talking about on this presentation or on your trading platform? Let me know, 10%. Or contact support is the best people. Right, oil. Who's asked about oil? MHB is asking about oil. Oil market remains very bid, or it's nice bid. If we look at it here, this is the daily time. This is the US oil market, so WTI, the West Texas Intermediate. But the UK oil market's the same. It's the Brent complex. We just look at the US oil, just keep it rather simple. We've been talking for a while. Let me zoom this up. I've been talking for a while. Any that been listened to me talk about oil, that the $52 level was providing a nice support, and that's what we've been doing. We've been sliding sideways here for most of January, but holding over the key $52 level. So we had a little buy-in or support area here, 52 or 51.80 to 51.50 was the low we got to here in the middle of January. But it held $52. It held. We'd had a sort of very bid with the rolling out of the sentiment. This big idea of a big stimulus package coming from the American economy, raising global growth. And then also OPEC and anticipated OPEC Plus continuing to keep the cap on production and continuing to roll out production cuts. Remember, we had that big surprise from Saudi Arabia for January and February about actually cutting production rather than just tailoring it and not increasing it. They were letting some of the other countries increase some production, and Russia came on side, and so that's held the oil price higher. What's happened this week is we've had the OPEC meetings, and again some positive talk of production cuts and production curbs, and then also obviously the rollout of the vaccines is the market's looking forward to the end of the first half of the year and into the second half of the year of economies, especially the developed economies, opening up quite rapidly from the summertime. So anticipation of a bigger demand for oil. So oil's continued to held at 52. It rallied significantly the last few days because of the OPEC meeting, and then we breached the key $55 level as well. This is 55.50, which was something like a 52-week high. So this is the daily time frame. If we go into the weekly chart, you can see here this 55.50 level takes us all the way back to January last year. This is January 2020, so a year plus high, 50 odd weeks, 50 odd weeks, as I say. So this is obviously this is just the beginning of the February candle, and that's our January candle. Sorry, that's our February candle from last year as the pandemic was starting to bite. And this is our January candle from last year. Remember, we spiked all the way to 65 when the United States and the Iranians went toe to toe over the assassination of Soleimani, and things got a bit spiky and a bit worried, and then the pandemic itself took over, and we spiked. We had that horrendous or crazy futures contract as we went all the way negative. As the futures contract went negative, and here our CFD here went down to something like $6 or so. Yeah, there we are, $6 in April, and then we've recovered since then quite strongly, and so we're back over 55. So oil MHB remains relatively well bid, and you'd need to see a break below certainly that $52 level I'm talking about, but the 20-day moving average now is $1 higher at $53 a barrel. So that's the one I'd be watching, my friend. Yesterday today, John Williams and everything is fine for me. No error at all. Right, okay. I don't know what's going on, Dr. Hassan, but I'm not going to publish your numbers for us, my friend. Unless women are saving me from selling the oil, thanks. This isn't advice, guys. Please bear this in mind. I'm not allowed to give any advice or anything, and please read the disclaimer at the end of the video. All I'm looking at is what the charts and how I interpret what I'm seeing on the charts. And remember, every technical analyst is different. We all, train and watch the same, and everybody understands the same indicators. But interpretation, as with economic output, is very, very difficult. And win fast time. I don't know what that means, my friends. I hope you're doing okay. I think that means, doesn't it? So anyway, let me just get back to sterling, because sterling's been the real asset of the day, and dollars bid as well. Where's sterling on? Here we are. So cable here, and this is against the dollar. Remember, the dollar's had a strong few sessions as well. So cable, massive move here on the Bank of England. Didn't actually change any of the Bank of England. So again, this is a classic example of the market drilling into the nuances of the statement. I think Governor Bailey I think he must have stopped speaking now. I don't know. He might still be speaking, but his press conference was ongoing from the top of the hours an hour ago. So I guess he's usually finished by now. So big move for sterling, and it was all to do with this idea of negative interest rates being ruled out, certainly, as I say, for 6 months. Also, the data was actually quite relatively negative. The Bank of England have reduced expectations for growth, the GDP in the UK, from 7.5% as it stood as their expected growth for 2021 in November, down to 5%. So it's quite a brutal and significant cut over the winter. So that's explaining the huge impact that the third lockdown in the UK has had. Businesses closed, but the good thing that's also helped lift sterling. We got the daily chart. You can see sterling's relatively well bid here against the dollar. and against other currencies as well. That 137.45 last week is where we were, and that's been rejected loads of times here. So 1, 2, 3, 4, 5, 6 days. You can see that last week as we came into the end of January, 137.45. So that's another upside target, which is where R3 sits today. So rejected many times. We break through there, we're off and running again to the upside potentially for sterling. But just coming back to that, sterling's had this lift because the trade deal with Europe's been done. We're a month or 6 weeks into it now. Lots of problems, lots of teething problems, but lots of some significant problems for exporters. Lots of exporters being told to open up companies in the EU if they want to export to the EU. So a lot of them are just stopping to doing that. The government are hoping new markets might open up, but they're a lot further away than just across the English Channel. But anyway, we'll see how that pans out. And I say GDP expectations cut quite significantly by the Bank of England to 5% from 7.5%. Obviously, it's a relatively good, strong growth, 5%. But remember, we had that horrendous impact of the pandemic last year. So the Bank of England still expecting the UK to bounce back quite quickly, but less, a whole 2.5% less than they were thinking it would bounce back in November before the winter bite and the third significant lockdowns happened after the Christmas session as well. MHP on a weekly pivot level. Indeed, this is the daily level MHP. If we go to the weekly, you can see this is messy because this is the hour chart at the weekly level. So there's lots of lines on here for intraday traders. But as you can see, that's moving quite, it's still very, very positive. The 20-week moving average, for instance, is all the way down there at 132.90. So 133 is the end of week support, but you can see we're quite elevated above that, pushing up to this 137 level once again. And if we zoom in this one, you can see, big bounce from last year, beyond last year's highs at 135. So moving higher. Cable, and that's the story of the weaker dollar, but the sterling crosses are the same as well. All right, you guys are obviously having conversations between one another. I don't know if I'm able to register when I'm clicking. Oh, is this registering for webinars, Dr. Prasad, you're talking about? Come on, guys, if you've got any problems like this, come onto the website, hotforex.com. Click on the chat button and you can speak to our guys. They're there 24 hours a day. So speak to them. If you want to speak to them in your own native language, we've got lots and lots of different language speakers in the support desk. So do click on that. If you want to speak to someone, speak to someone in your native language rather than English. Not that there's anything wrong with your English, Dr. Prasad, but certainly come on there and have a look. Who's next? News on tomorrow's AFP. Yeah. So let's talk about the event of the week, really. I mean, it's been a big week. We've had PMIs, manufacturing and service PMI. Generally, overall, some of the manufacturing ones are a bit dippy for Canada and the United States, but overall, the service PMIs were better yesterday. So they've looked relatively positive. The ADP number yesterday came in at 140,000, much better than expected. Yesterday. So that's the correlation between the ADP number, which is the private payrolls number. ADP is a company that actually generates wage slips, basically. ADP, if you don't know who they are. And they survey the private businesses. Obviously, it doesn't include government sector, which is obviously what the non-farm payroll is, the NFP that Gomen Malenko is talking about here. Meleno, sorry, pronouncing name correctly. What was I saying? Remember last month we had this big shock. We had 140,000 lost jobs, 140,000 negative. Big surprise last month. Another hit and the dollar took another hit on that last month. We're expecting again a big. As we've had over the last few months, is a very wide variance in what the market participants, the big professional banks, the big professional hedge funds, what they're anticipating for NFP tomorrow. You see on the Reuters surveys around about 60,000. The Bloomberg surveys around about 55,000. I haven't actually seen an update today. They normally update them on a Thursday. I haven't seen them yet today. following the ADP number. So the ADP number was very positive, 140,000. So, I've seen Action Economics, for instance, we're talking about 100,000 new jobs tomorrow. So that is still in the mix. So jobs still remains a big issue for the new incoming president, President Biden, in the United States. But again, the weekly claims that we've just seen today, just now, guys, for NFP tomorrow, I say it came in nearly 50,000 better than expected at 700, or not as bad as expected. So it was expected to come in at 830,000, and it's coming at 779,000, 780,000. So say about 50,000 better than expected. So that, the pressure to the upside, as Andrew wrote yesterday, if you go onto our website and read Andrew's note from yesterday, about the NFP tomorrow, and that's what that implied yesterday. From yesterday's ADP number, this week's weekly claims is better as well. So we've had two positive numbers, the ADP and the weekly claims. So it suggests or pressure to the upside on any expectations for NFP tomorrow. So, that's probably where we're sitting. Okay. Lots of questions all coming in at once here. Let's have a look. Where did I get to? Oh my word! Questions. It's very strange, this system. It's suddenly all updates. Good evening. So far as pivot points indicate for week one. Thank you. Hey, trying to chat. I have to sell. You'll speak to one. Right. Next request was from Suru here about the yen. Interesting. Dollar has really picked up against the yen. Whether it's the Bank of Japan selling, we don't know. We don't really know. Just see what's happened. So dollar yen here. If we got the daily chart again, significant break here of this 10. Let's just zoom this up again. So again, it was pretty boring. Not a lot was happening between what it was pivoting through 104. We went all the way down here and looked like we were crashing out at the beginning of the year here. We went to 102.57, and since then we've sort of accrued really, but we went sideways for most of January. Really boring. Not a lot going on. 103.60 to 104. It's a very tight range for dollar yen. And then we suddenly got some life towards the end of January. The dollar came back to life. We breached and closed over 104. So that was the first interesting point. As you can see here, this big move up here from this sell-off here. We held the 20-day moving average. So not a lot was going on from a trending point of view. But we were holding the 20-day moving average. Looked like we may be moving down here, but immediately we recovered. Didn't recover above there. And it wasn't until this day here where we broke over 104 and closed above 104. We also broke the 200-day moving average, but more importantly, we broke out of that range that we'd been in for most of January. And it wasn't until here toward really it was the last day, last trading day of January, that last Friday, when we finally broke over that and closed over that as well. So big, strong close into the end of January. We tested the 105 area and we're struggling to hold up, but here we are, 105.31, so moving higher. The 200, this is a daily time frame, remember guys, the 200-day exponential moving average sits there at 105.40. Yesterday it was 105.50, so it's come down nearly 10 pips in one day as this trend unwinds. So that's a big, strong move here from that breakout point here, that big candle there on the 27th of December. See how it's taken out all of that previous action. That's why it was so significant. That one candle here on the 27th took out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days action, really. Obviously these were a bit lower than this one, but, best part of 10 days entire action, i.e. the volatility of the last 10 days was taken out and we closed higher. That's another big, strong candle. So the close is significant. Follow through the next day and then on the Friday. So this is Wednesday, Thursday, Friday into the end of the month. And then we followed through at the beginning of the month of February. And here we are, 105.31. A big resistance sits there at 105.40. Okay, so dollar yen to the upside, Surrey. Again, I don't know what time frame you're trading, but that's the daily. So the 4-hour will look just as strong here, moving higher. Again, see how that breakout, see how that, there you go. It's even more clear there, isn't it? 4-hour traders, or not even more clear, but nice sideways action ticking up there out the top of the Bollinger Band. So had we got higher, but there's that 104 and off we've run and we've stayed over that 20-hour or 20 period moving average here on the 4-hour all that time. Really nice trending 4-hour chart there for dollar yen traders, and 1 hour is a similar sort of active move, a bit more. Zoom in a bit, a bit more sideways action in the 1 hour as you would expect there. That was the third. That was yesterday. Went sideways again, but off we go again today. So dollar yen to the upside. Dollar getting that bid. Where did I get to? Peter, please talk about gold. Gold had a massive day today, guys. I don't know if any of you trading gold, but a huge shakeout. Another one I was going to come to anyway. Gold. For Peter, you asked me again. This is the 1 hour. Sorry, it's not. It's a 5-minute time frame. And it's been trending lower for a while. This is the 1 hour time frame, and it's been, the pressure's been, as I've said for many, probably a few weeks now. The bias has been to the downside for gold. What's really spiked gold today is there's been a big steepening of the yield curve. So as the yields go up, remember gold is a non-yielding asset, so that always puts pressure on gold. Obviously, the dollar has improved as well, so that's another thing that's putting pressure on gold. So there's a bit of a double whammy there, and so we've got this fall in the gold price. And here we are. I think I posted on Facebook and I tweeted out earlier as well about the fact that gold had broken through this S3 level for the day, which is very significant because typically prices only get to their S3 or their R3 levels, these extremes of the pivot point. These are daily areas, remember, S1, 2, and 3, and R1, 2, and 3, and the daily pivot. They only get to the S3 level, the extreme, 5-6% of the time typically. And here we are plunging through it, or testing it this morning here. Then we closed under it for the first time here at 12 over lunchtime. We bounced off it a wee bit, but then last hour we've broken lower for the day, significant. And then this current hour we're in, which has just started, we're down again, and we're testing the big psychological 1800. So that's a big line in the sand for gold traders, 1800 down for gold today. So off probably 2%. I can't actually see my terminal at the moment, probably close to 2%, certainly 1 and a bit percent for gold today. And if we go to the daily time frame, you can see, again, zoom up, again, candle size matters. We had this massive sell-off here on the 8th of January, sideways a bit, but again, airing to the downside because we haven't been able to break over the 20-day move now. Although it's going sideways, there's no real trend here for most of January. It's sort of bouncing off, and the key 200-day moving average there, which I've been talking about for weeks now, which was sitting around 1820, end of day, this is, remember, has been breached today. I mean, today isn't over, so we could retrace all of that, but it'd have a big long wick. So that would suggest some support here at the 200. But here we are all the way down to test 1800. So it may bounce off this 1800. We are oversold. The MACD has gone negative, so it's moving down. The stochastics have moved into an oversold area here. This is a daily time frame, remember. And the RSI on the 14 setting is at 34, so there's some more distance. That could fall, the RSI could fall, this level here. You can't see the stochastic because it's behind my little head, but you can see the pressure has remained to the downside for a while, but certainly intraday, it's a big old move to the downside. So 1800 is that key level. And then below that, we look left, and where do we look to? Well, we take us back to November, and this November low here, this is the end of November, we went down, and we closed the day, and we closed the month at 1775. So, if this break of the 200 hour holds today, there's perhaps more pressure to the downside. So 1800, the new big move today for gold. There's a 4-hour chart to it as well. So gold, a big move today. So lots going on today, my friend. So where was I? NFP, we talked about that front. NFP is tomorrow. It's always the same time in the United States. It's always the same time, GMT. It's 1300 hours London time, GMT tomorrow. It's 15:30 server time. So if you're on our servers, it's tomorrow. Non-farm payroll, 8:30 in New York. So it's 13:30 GMT, 15:30 server time. Andrew will be live tomorrow as the numbers come out. So join Andrew tomorrow 10 minutes before the numbers come out at 15:20, 13:20 tomorrow for the NFP analysis. I hope you got that, my friend. Waylon, yes, NFP. We just talked about NFP tomorrow, Waylon. As I say, 60,000 expected, but the pressure is probably to the upside given that the ADP number came in at 140,000 yesterday, and the weekly claims for this week, obviously it doesn't include the NFP. The NFP week is done a couple of weeks ago, but it was 50,000 better than expected today, so that's relatively good news for obviously the US economy. Not still those 780,000 people are claiming unemployment for the first time. Last, Peter, we just talked about gold, didn't we? Yes. Perhaps I'll come back to where I was. I don't know what that means. Waylon, we talked about gold. Peter, you're asked a few times, so I haven't got to it. Okay, understand. Peter, there we go. I hope I've answered your question, Peter. Anything else on gold? Waylon saying gold's good for me in the Asian session. It certainly was. Certainly it has been. It's been airing to the downside. And again, if you're trading this the 4-hour strategy, would have taken you short here. As I say, on the second, where I was a couple of days ago, and you've gone all the way down, and you're still short. Basically, it's a huge move there. We went short there at 18.49, so 18.50. You've made over $50 on that, and remember, 1 cent is 1 pip when you're trading gold. So there's a lot of pips available there on that gold trend as that's just continued to move down. And don't be afraid to hold it. I'm not saying hold it, but the rules with this strategy is if you were following this, you could either take it 3 times the ATR, 3 separate trades, ATR each time. So that would have given you $10, $30 gains. That's what the ATR is. It's $10 here. So you're doing 10 and then another 10 and then another 10 as it's unwound. That's the way to trade it here on this 4-hour time frame. Or you stay short until it comes back over the 50, but you might have panicked. 1,800 is a huge, huge number. I'd expect a bit of a bounce from you, but it hasn't, interestingly. It's just collapsed or continued to move through it. If we go down to the 15-minute time frame, see, interestingly, the 15-minute time frame is still under the 1,800 level. So there's still pressure to the downside at the moment. There's no sign of 5-minute time. 5-minute time frame. So even these shorter time frames are still really short. This is the 5-minute time frame. Same setup for the chart. So with this one, you would have been short here at 3:20. So you've been short for nearly an hour now, even on the 5-minute time frame. That's a continuous, really strong move there. You would expect some sort of resilience at the psychological 1,800 level for gold. That isn't showing out at the moment. So again, that's a relatively weak sign that 1,800 has proved little support here. And even, let's just go back to the minute time frame. And even the minute time frame, we've been under 18. It's been under 1,800 now for 1, 2, 3, 4, 5, 6, 7, 8. 8 minutes, not for long, but certainly it's 8 candles, isn't it? If you're a minute time, it's all about number of candles. That is continuing to trend lower. So again, as a minute, trading this on the 1 minute time frame, so relatively scalping, you will last short here again, like the 5-minute trade at 15.20. So again, nearly an hour. So for a minute trending chart, that's a really nice chart, isn't it? Because you've been under the 20-day period moving average here. You haven't closed over the 9 period at all. We closed into it. Actually, you could have cut out there and then gone short again there, and it's continued to move now. So you have actually, so there's 2 trades, but the trend is very much to the downside, even as a scalper. So it's not a great day for gold, and this is the hour chart, and it's continuing to move down with 45 minutes of this candle still to go. But again, that's a weak gold chart today as yields dominate and dollar dominates, as I wrote earlier. Excuse me. Dylan says, thank God I closed my cells earlier today and I'm done for the week. That's brilliant, Dylan. It's Thursday. It's Thursday afternoon. He's finished for the week. Closed his laptop, switched it off, Go and have the rest of your life. Go and walk the dog. Go for a swim. Do whatever you can do in these crazy worlds. Go and do something else. Go and do some research. Read a book. Loads of great trading books. Can't recommend them enough. So there we go. And write it all down, Dylan. What's happened. So I'm sure you've got a strategy. You've got a journal. I hope you're writing it all down. Like literally, otherwise my whole trading week would have been negative. Well, there we go. Write it in your diary, write it in your journal, why it happened. But also write the negative stuff down. Don't be afraid of writing the negative stuff down, because your brain stops you from remembering the bad stuff sometimes. You remember the good stuff because it's nice. It's a nice feeling, isn't it? The bad stuff, write it down, mate. I hope you are. Dylan, very best. Great little comment, my friend. I don't know where you are, where you're trading from. What exactly caused the sudden spike in the British pound? Emmanuel, the sudden spike in the British pound, it was all to do with the major thing was the fact that the Bank of England have ruled out looking at negative interest rates, certainly for at least 6 months. Okay, that was the major that was the major big jump for sterling. Okay, everything else was in line. They didn't change the asset purchase. They didn't change interest rates. That was already priced in. The market was expecting that. What the market wasn't expecting was such a decisive rebuke. That's American, isn't it? A kickback against negative interest rates. There was lots of talk at the end of last year that the Bank of England were going to have to, or were more likely to move to negative interest rates than not, like Switzerland has been for years. Sweden tried it. The EU most famously tried it under Mr. Draghi, remember Mr. Draghi, the new Prime Minister in Italy now. And that was the major reason that we had this move. From a news point of view, a lot of the news is really negative. They're talking about a big spike in inflation as well. UK gilts reacted significantly to that announcement as well. Big spike, potentially over 2% in inflation. And also this idea that the GDP was going to be a more difficult economic outlook for the UK. You'd have thought that would weigh on sterling, wouldn't you? Weigh on the economy if the GDP is going to be much, much smaller than they expected just in November. It's going to be 5% rather than 10%. But the big move, this 100-odd pip move against cable and other crosses, was all to do on the rebuke of kicking out of negative interest rates. Although I sent a note out saying they kicked out negative interest rates full stop. I should have perhaps caveated that. It's more about certainly for the next 6 months. So that takes you into the end of 2021. And again, for me, I'm still not convinced of a negative interest rate policy. Obviously, there's arguments on both sides of it. But certainly for the UK, the Fed have sort of poured cold water on it. But certainly the Bank of England has certainly done the same thing as well. The other thing that happened as well that would have affected the sterling move. Let's just talk about sterling. Bank of England. The sterling move was Yellen. Remember, Mrs. Yellen is now the new Treasury Secretary. She talked earlier today about the need to make sure that markets are working efficiently. So that suggests interference by the Treasury Secretary, interference by the Fed. There's certainly going to be a better relationship between the Fed and the Treasury Department under Biden than it was under Trump. That might have hasn't spiked the dollar at all. The dollar's still relatively strong today, as we saw with the dollar yen here at this 105.33.75 now. So dollar's still holding up very well, but it's certainly a big move in sterling. It was all to do with that announcement about no negative interest rates in the UK. That's what I want to know, Dylan. That's what I want to know. What do you want to know, then? Sorry, your messages are all split up, Dylan, so I can't. I assume you're talking about. Anyway, hope you've had a good day, and just leave, my man. Or is this part of you're not trading, so you're listening to watching me? Very good. Ifran, euro. I said earlier, Ifran, euro collapsed quite significantly today under 120. I think we've answered this, haven't we? Yeah, under 120, and it's continues to move down. And here we are currently finding some support at S2. So we've got some significant support here at 1985, 83 for 1, 2, 3, 4, 5 hours. That's a significant support level. It was a support level from yesterday anyway because it's S2. But if that breaks, there could be a move down because we've It's been support for 5 hours now. Is that right? 1, 2, 3, 4, 5 hours, yeah, into our 6 hour right on there. So we'll see where that goes. We still got some more data, US data today. Remember, US cash markets, the equity markets, the commodity markets, futures markets, opening in 10 minutes. So let's watch that open as well. Peter, we looked at gold. Yes, we looked at gold for you, didn't we? Yes, we did. Yeah. So are these repeat requests or not? I can't remember. Actually, it's for 15 minutes ago. That's why. Greatest goated. Would it be good move to sell XX pound pairs now because the pound's moved? This always happens, guys. I can't tell you what to do. Greatest goated. What a great handle that is, my friend. I'm assuming you've got to be a man with a handle like that. Greatest goated. You could argue that, but look what happened. Let's just zoom this up. You could say that after this big, huge candle here, couldn't you? Oh, it's gone too high already. But what happened an hour later? It kept going. Now it's cooled down a bit because it's ran to its 200-hour moving average here as an hour trade. So have a system, greatest goated. Don't just gamble on the news breaking out, and just because it's gone up, it's got to come back down theory. Let me just say this. Things that are high tend to go higher. Things that are low tend to go lower. That's what market participation for me for 20 odd years has shown me. This theory of buying low and selling high, that's great, but buy high and sell higher is I can't remember who said that. I don't know if it was Buffett, but it was certainly one famous stock trader. But when things are high, that means there's people buying it. There's lots of momentum, and if the volumes are good, that's the time to get in. So, and again, with any candle patterns, any simple candle analysis, just remember two things with candles: size matters, and the wick matters. Wick is rejection. The size and the body of the candle is massive. Look at that. It closed at its high. There's no wick there of that particular hour. That was more momentum to the upside. A huge candle engulfing. Let's count them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So the last 20 hours, as this pair has slid sideways and then descended, was all engulfed in one action, the big action of the Bank of England announcement, surprising with this big cosh to negative interest rates. So, size matters, my friend. So greatest goated, whatever your system tells you to do. This system here was short here, and it's suddenly got stopped out. In fact, it would have, you would have been trailing your stop down, depending on where your stop was. And that suddenly got turned around and gone long at that point. So, what can I say? What is happening with gold? Data%, we talked about gold. Gold is descending. The reason gold's moved down, Data%, as far as news is concerned, is to do with the rise in the yields, the steepening of the yield curve, and the strengthening dollar. So we've got these two pressures on gold. And as I said earlier, we're significantly under 1800. And as we talked earlier, on those lower time frame charts, we're still showing no sign of turnaround. Here, the 5-minute chart, it's still descending under the key 1800, where you would have expected some sort of support, and it hasn't happened. We're continuing to move down. Even the 1-minute chart, as we saw earlier, hasn't bottomed out. It's down. It's tipped up a bit, but it can't break over its 9-minute moving average. It's moved back down again. So this is the 1-minute chart for gold. It's continuing to edge lower. So that's on the higher time frame. That means there's no turnaround in the lower time frames, or the faster time frames. So certainly the higher time frames still are very much edged to the downside. So a significant day for gold today, under 1800, and where we close today, we're quite significant. There we go. I knew there'd be somebody here. Sergio, you sell pound. Well, if your system's saying sell, Sergio, it's up to you, my friend. The very best. Oh, look. Peter, we talked about that. What's going on? It keeps taking me back up. Sorry about this, guys. It's taking me back up. So, yeah, gold under 1800. You're right. Hello, Nicole. Safraz, good afternoon to you. Check out SOS, Tata Investing. I don't know what SOS is. I can't recommend anything, Krishnan. But the trend on gold is to the downside, my friend. You can see that very, very clearly. There's a trend following trader. Let's say, trend following trader on this 1 hour time frame using this particular strategy, the one we can see here on the chart here. It's been shortish. It's been biased to the short side for a long time. So there was a move down there. It went over its 20-day moving average or 20-hour moving average very weakly, and then it went short again as it's moved down. Then it went up again very weakly, but it was lower than it was there. So the trend was still to the downside. As you can see here very clearly, the highs are getting lower at this point still, even though we flattened out. So we went flat here yesterday, but still airing to the downside, wasn't it? Even though it wasn't really trending, it was moving. It was actually moving lower, wasn't it? Because these high points were lower, and that's what the fractal highs are showing us there. Those little arrows there, lower each time. The lows were getting lower. So into the close of yesterday, it sort of flattened out, went sideways, but then big move, significant move was this morning here. But all the time we've been under the 20-hour moving average, and that tick up there, that move down there, and that was your last on the as a 1 hour trader. That was the last time we were over the 20-hour moving average. Very weak entry to go short, but you've been short ever since because we haven't closed over the 9-period moving average there. That was yesterday at 5 o'clock, 1700 hours. So nearly 24 hours later, we are all the way down here. So from that 1836 last entry, we're all the way down here at where are we now? 1795. So $40. And if 1 pip is 1 cent, do the maths. Okay, that's a big old move down, and that's still short basically on that 1 hour time frame. But again, it's all about time frames, Krishnan, my friend, and that's still moving short. Right, something new, something different. Chidu, dollar CAD, important because tomorrow is not only is NFP day, but it's also the Canadians announced their jobs date as well, exactly the same time as the Americans. Don't do it every month, but probably about 9 or 10 months of the year, the Canadians announce their jobs day at the same time as NFP. Excuse me. I got this mug. Somebody gave it to me at a friend of ours, Charles' christening. So I'm sure you're interested in that. Dollar CAD, again, another one, dollar on the up, but obviously the Canadian dollar getting lots of support from the rise in the oil price, so a bit more choppy here. But the daily time frame has been a turnaround for the dollar again, this dollar story into the end of January, into the beginning of February. So the lows we spiked in January when we went under 126, and the trend looked very much to the downside still, didn't it? It was still, zoom this up again. The trend was very much to the downside as we spiked this new low here. But then we were sort of continuing sideways, but it looked like we were going. Then the immediate following day of that low here, under 126 to 125.70 something, wasn't it? Yeah, 125.87 I should say, was an immediate, relatively strong candle. But at this point again, you were still airing to the south rather than moving up, weren't we? Because that candle was still engulfed by the short, so you're still short there. So it wasn't until here, the 27th of January, where it looked like something was happening. It was a break of this downtrend here. See how we've broken out, and it closed right on the key 128. So big move that day, 100 odd pip move from below 127 to right onto 128 on the 27th of January, and that was like that was a real point of interest. And again, that was an entry point for this trend to have closed out, certainly through this period, and then to perhaps look to go long. And that's what's happened here on the 27th. Can't break 128.50 zone. That's the real top there, 128.50 for dollar CAD to move higher, but it's still supported. So for 1, 2, 3, 4, 5, 6, 7 days now, we've been over the 20-day moving average. The 5 and the 9 are still aligned to the upside, so it's still biased to the upside. But obviously, the Canadian dollar is getting some support from the oil price. Obviously, the dollar gets support from the oil price as well. But the daily still looks okay. The 4 hour a bit more choppy, so that would have been up, took you out, and it's gone long Again there, and it's taken you out there. That would have been a flat losing trade. That short didn't really play out. The 200 hours played in there. So you go. So you can see the 200 period here on the 4-hour chart is providing your support, and then the last long position or the last position on this strategy would have taken you long here this morning at 8 o'clock around the 128 level on the 4-hour time frame. The 1-hour time frame, even more choppy, I would guess. Moved down, sideways. Again, the 200-hour is providing a bit of support. Not much action into the close yesterday. And again, that's that. It was an hour later before the 1-hour chart went north, but then it went south. So that would have stopped you out. That would have been a losing trade. And then it's gone long again. So it's very choppy again. So that would have been another long position here. Again, it's like this morning. Yeah, it's the same timing. That's the day before that. So that's that strong hour candle there from 11 till 12 this morning. The 1-hour time frame's gone long. The ATR this morning when that triggered was about 11 pips on that. So you've got 128.03, and you've certainly got your 11 pips, certainly 128.22. So you've got 2 times your ATR on that one, moving to the north. Where were we? That was dollar CAD. It was nice to talk about something different, Chidos. Thank you for that, my friend. Let's go to the other extremes. The weekly is still relatively weak. So can you see that? It's a bit messy, isn't it? But you can see here we're still under that 20-period moving average, although this week we finally, these are the 5 and the 9 weekly. We're broken over. Last week we closed over the 5-week moving average for the first time in a long time. See that white candle over that blue line? We haven't done that for a long time, since end of October, where we tested the 20-week moving average and didn't break it. So that's a positive week last week and a positive week this week, because we're now closing over the 9-period moving average. And again, we haven't done that since the end of October, but it didn't actually manage to break over the 20-week moving average, but it's looking like some upside. So there's potential upside here for dollar CAD on these over the last 3-4 weeks now. This is our 5th positive week it's our 4th positive week, I should say, that we're into at 128. So moving up, perhaps 129, 130, and that would mean a break of the 20-week moving average. So dollar CAD possibly biased here on the weekly. BZ, we talked about euro. Euro's very weak. It's moved, well, not very weak, but it's weak. It's moved under 120, and it's finding support today on the 1-hour time frame here at 119.85. The daily time frame remains weak, as it has been since the middle of January, really, when it went under the 20-day moving average, and that continues to unwind. And then here, as we started February, we've breached the 121 level, and then we've moved down into our 4th day down here. So Monday, Tuesday, Wednesday, Thursday, 4 consecutive days down. 5th day down on tomorrow, and that'll be a significant unwind. 5 days down is a bit of a question mark. Might find some support, but at the moment 120 is being breached as well. Next big number is 119, when we were last down at 119 back in the end of November. So euro moving lower, BZ. I followed the gold trade, but it booked profit at 1880. Now feeling bad. I don't know what you mean. MHB, my friend, and this goes for everybody as well. Don't feel bad. If you've booked profit, that's great. If your system said get out at 1880, that's fine. If it hasn't triggered to get back in, that's also fine. Don't let that eat you up. Just because it's gone much, much lower. That is trading. There'll be many, many, many more trades to come along. So have a system, trade your system, bank your profits, and keep your losings small. That's it. It's very easy to say. It's quite difficult to do. But don't overcomplicate things. There's too much BS spoken in this business, and people overcomplicate things. Try and keep things as simple as possible. and it'll work for you. Don't feel bad about banking a profit, MHP. Forget about it. Write it down. Why did you get out at 1880? Was it the emotional get out, or was it your system saying get out? If it was an emotional get out, you only got yourself to blame. Don't trade on emotions. Have a system. Trade your system. Follow the rules. I can give you a comfort in your trading if you can only trade with us. You are interested. Inbox me. Oh, Mark, go away. I started my account with Capital F. Oh, God, Alex. I'm sure, Alex, whoever Capital F Street FXR, I'm sure you did. Alex. Yes, that sounds really, really good, doesn't it? Anyway, can you please check out NVIV on Webull? It says analysts price target shows low, mid and high of $32. I don't know who NVIV are, my friend. But if it's trying to spam me, that's very good. It's probably more of this. Messages have stopped. Anyway, let's get rid of that. Right, let's have a quick look at the markets. There's no more requests coming in. Right, so euro, dollar's up today. So we'll call it a day because I've been here an hour now. So 1940, where are we? 1986. 1983. It's still moving down. So we've got a low here. Euro down. Dollar yen continues to move higher. 105.35. Sterling ran into that 200 hour and then turned around. So again, unlike what we've seen with gold, we'll have had some sort of pin bar action on the lower time frame. So the 15-minute, there we go. We've rallied through the R1, but we've got a tweezer top there on the 15-minute. Although this hasn't technically triggered short here with this moving average strategy, there's certainly a pin bar there if you're just trading the price action. And we've been down for the last hour or so. So having rallied to as high as we didn't get to 137, but we got to 130. We got over a smidge of it, 3 pips of 136.97, and then we've moved down some 30 pips to the downside on the 15-minute time frame. So the 1 hour has obviously found that resistance there at that 136.82, where the 200-hour moving average is. What's this? MHB say on pivot point S2 daily booked, and yet that was good. Well, there we go. That's fine. If you're trading at the end of day, MHP, you shouldn't worry about what's going on today because it isn't over. Okay, it might. Who knows? There's plenty of hours left. It's only the US market is only 8 minutes into its session. Anything could happen, but it's looking like it's fairly negative, isn't it? So if you're trading the end of day, you shouldn't really be that upset about what's going on the 5-minute chart or the 1 hour chart, should you? You're only interested in where the price closes tonight. And if it's lots and lots of dollars below where you got out, that's just trading, my friend. That happens. And you've got to get used to it because it'll happen again and again and again. Okay? Don't beat yourself up about, making a profit. Equally, don't beat yourself up about making a loss. If that had been a losing trade, it'd be eating you up even more than getting out too early. But you've got to try and keep your mind as calm and as even balanced as possible. It's very difficult, and I've got lots of tricks and tips I can tell you about. But keep it as well even balanced as possible. Sorry, I was reading Alex's post again. Sadhu, gold. We just talked about gold. Sadhu, I don't know if you just arrived, but gold is weak today, certainly. And as we were saying before, let's just do this as an example. This is the 1 hour time frame on gold, Sadhu. It's been moving lower all day. It's gone right under this key 1800 in this current hour. There's still 20 minutes to go. But if we go down the time frame, so 30-minute hasn't turned around. The 15-minute is showing no sign of turning around. The 5-minute has been up for 2 candles since we broke under 1800, but it's still short. Even the 5-minute chart, there's been loads and loads of pips there for you 5-minute intraday scalpers there. So That went short then. It's not a great short, but it's a big candle, still taking out all that action here at 15.20. So over an hour and 20 minutes, 5-minute traders have been short for all these candles, 15 odd candles, and we're still short, and it's still trending down. Look at that. You don't get a much better trend than that. Nicely aligned. The 20 period, the 9 period, the 5 period, that is trending lower, my friend. So we've breached 1800, the big yellow line here, and we're continuing to move down. There we go. It's moving lower. That's what's happening, isn't it? You can see that happening. But when did you get in on this trade? When did you get short? Well, traders following this strategy would have been short here, as I said, at 15.20, just before I came on air. So anyway, there we go. Short it is. No, you booked. That was right. I'm going backwards now in these questions. Oh, that was the last question, Saidu. That's all right. So gold continues to move down, even on this 5-minute. And the 1 minute, it's been a bit choppy as it's moved down, but it's still, there's more red candles than white candles, isn't there, in the 1 minute time frame, even since we've been under 1800. So we've been under 1800 all this time now. When was that? That was 1707, and here we are at 1741, and it just continues to unwind. And here we are, we're lower. We're into 10 minutes of the US cash session, and we're at the low of the day. A new low has been performed and been punched down in the last minute, just where I'm talking now, and in the minute before that. So, and we're going lower again. So 1787. So the trend, continues to move down, even in this 1 minute time frame. So gold has had a very weak day, and it's been coming for a while in a sense. If we go back up the other extreme, the end of day, the daily time frame hasn't been able to break over the key 20-day moving average. The moving averages here at the end of January started to move down, and it's another big sell-off. When gold goes, it can go quite significantly. So you can have some big candles like we had here. Also at the beginning of the month, this was the beginning of January, huge 3-day sell-off there from that 1950, wasn't it, at beginning of January, and off we went, and it's continued to move down after a lot of sideways. So remember, the longer, sometimes, the old Wyckoff technology strategy, lots of, consolidation, the longer the consolidation goes, the longer the sideways action goes, the breakout can be quite significant. But again, as an end of day trader, this goes to MHB and all of you. You don't make a decision on today's candle until today is over. Lots of action for the intraday traders today on gold, certainly, but gold is moving to the downside. Let me just finish where we go. So let's just run through the other major crosses, the other major forex market that we haven't talked about. Australian dollar, nobody's asked about today, but again, another one that's been running up quite nicely, but looks the signs of weakness in all the Aussie crosses I mentioned earlier in the week. And again, that's another one that has been short, the Aussie against the dollar from the 27th of January on an end of day basis. So the same with the New Zealand dollar, but less so. The New Zealand dollar is showing some more resiliency, and it's consolidating at these highs. So 71 and 72, again, another one that's in a channel. Is it going to break out to the upside? Is it going to break out to the downside? We don't know at the moment. So, there's no trend going on there. The moving averages are flat. We've run out of steam, having ran all the way up. So that's an interesting level we'd have marked. This high, 73. The close of the day was at 72.90. So we never got quite to 73 at the end of the day. So that's our high we'd be looking for, 72.90. But at the moment, as you can see, remember, sideways action. So the longer it goes sideways, the breakout can be quite significant when it happens. Okay, so Kiwi also sideways. CAD we just talked about earlier, didn't we? And the Swiss franc, another one nobody asked about. Well, again, another great trader. Don't be afraid of trading the Swiss franc, guys. I know lots of people got burnt in 2015, but it's a long time ago now, and it's been trending really well. So again, another one trending really much lower. New 3-year lows down here at 87.56. And then again, another one. See the sideways action when it breaks? It can break quite significantly. Here it was sideways action before we went down for the final leg down. Here we were sideways most of January. Couldn't get over 89. Couldn't go under 89.50. So relatively tight 50 pip range for the Swissy against the dollar. Bouncing up and down there. And then a big breakout here, 1st of February. And again, another one that would have scared a lot of people out because it's been such a big candle. We thought it's going to retrace, but it hasn't, has it? It broke here on Monday, and then we've continued to move and accrue to the upside. So Tuesday, Wednesday, and a break again Thursday. We're over the key 90 level, and we're at, so dollar Swiss here is, as the Swisses weakens, we're at something like, I don't know, 50-day, 45-day high here for the dollar Swiss, and that trend, see how it's broken out there here on Monday, close of Monday, you end of day traders for the Swissies, so Swissies weakening. Bitcoin we talked about earlier. I haven't got any other cryptos on here, guys, but again, that's another one into our 5th, 6th day, 1, 2, 3, 4, 5 days up. We're actually down at the moment today, but we've had 5 consecutive days higher for Bitcoin, broken over that what was a tentative downtrend line on Tuesday, higher again yesterday, Wednesday, and so that's holding up quite nicely over the 20-day moving average with a break of 35,000. Next is obviously 40,000, and above that could be 42,000 for Bitcoin to the upside. To the downside, we could take a break of 30,000 would take us certainly to 29,000 to test these January lows. Okay. And finally, we've done gold, we've done oil, the dollar index itself. Again, and this is the 1 hour chart, again, trending higher. Daily time frame, you see again, another one that's sort of broken out of a bit of a channel, but it's been over the 20-day moving average there for most of January. So it's been relatively well bid against what many people thought was going to happen. So from the 11th of January, the dollar index itself has been over its 20-day moving average. So, trade what you see, not what you think, and not what the gossip says. Trade what the chart, what the price action is telling you. So we've broken to new highs. Have we broken this 90-80 level here from the middle of January? We broke it here at the end of February. So again, a strong week thus far for the US dollar. See what NFP brings tomorrow. But so far, data's been good. The chance of a stimulus, this big, huge $1.9 trillion stimulus from President Biden getting pushed through because he's got the votes to do it. He tried to get the Democrats on side, the Republican senators on side earlier in the week. They came up with their own package of about 600 million. Not enough, say the Democrats, say President Biden. So it's a big stimulus package is certainly coming, or it appears to be certainly coming. And 91.50 is next level, and then 92 for the dollar index. So if there's no more questions, guys, I'm going to go because my voice is nearly going, and I've run out of coffee as well anyway. So okay, so take care, everyone. Join Andrea tomorrow at 13:20 GMT, 15:20 server time GMT, when we'll be doing a similar session here with Andrea for the important NFP announcement tomorrow. So if there's no more requests, I'm going to go. You've got 5, 4, 3, 2, 1. I'll give it a few seconds, see if anything comes through. Nothing comes through, and we'll leave with it a thank you from MHB. Thank you, my friends. Thank you for attending. Thanks for your time. Best of luck, and may the pips be with you. All the best, everyone. Take care. Bye-bye.